Welcome back to the Morning Blend. The government announced last Friday they are moving the deadline for filing your taxes to July 15th. Nick Walls is the managing director of Leader Financial Group. He has tips to save you money on your taxes. Good morning to you.
Good morning to you.
I think a lot of people have been procrastinating.
Yes, as normal, a lot of people procrastinate with a lot of things.
Every year we do that, right?
And so fortunately, the government extended the filing deadline to July 15th to give a little bit of breathing room for individuals who it might not be on the top of their mind right now.
Well, and that's what I was going to say. I think people right now, it's not that maybe we don't have the time to be doing our taxes because a lot of people are home, but we have so much else on our mind. For people, really worried about being sick or people who are sick, it's not top of mind.
Yeah, it's just not a priority right now, so it's good to have that little breathing room. One thing we're still waiting for is anything from the government as far as the contribution deadline, meaning the deadline to get your contributions in for Roth contributions, IRA, HSA. To the best of my knowledge, that might still be April 15th, so just be on the watch out for an announcement around that.
And something important to check on because those are important deadlines.
Correct.
So we can talk a little bit about that in a second. So there's a new deadline. So the crunch time is put off a little bit at this point. But there are really things that people can be doing to save money on their taxes, right? Or just make sure they're taking full advantage of the laws, right?
Correct. And one disclaimer I did want to give is that these are general tax tips and sometimes subject to exclusions or limitations based on your individual situation. So absolutely see your financial professional or tax professional for your individual circumstances. But having said that, everybody's got what we call gross income, meaning all the wages or salary or any income from sources you got during the course of that year. Mm-hmm. And there's several ways you can actually reduce the amount of that income in terms of what the IRS is going to look at to see how much taxes you owe.
Okay, and that's a good thing.
That's a good thing. You want to owe generally as little as possible. The biggest one is probably what we call a qualified retirement plan, employer sponsored. So for individuals that work for an employer, as long as that employer offers a 401k or a 403b if you work for a nonprofit, every dollar you contribute to that pre-tax 401k or 403b will actually reduce the amount of income that the government can tax you on.
Okay.
Which is really cool. The 2020 contribution limit is $19,500, so actually a lot of money you can put into that. And that's what we call a calendar year contribution, meaning you have to make the contribution during that calendar year for it to count.
Okay, so that's one way to sort of reduce your income, at least in terms of the eyes of the government, in terms of how much that you could potentially owe or be getting back. Are there other ways that we can sort of reduce what our gross income looks like to the government?
Yes, there are, and I'll just mention just a few. So number one, I wanted to add this for a shout out for all of our teachers out there right now because they're really scrambling to make sure our kids are still learning at home. Specifically, I have 3 small ones at home that go to Wauwatosa Montessori School.
Okay.
Told them I'd give them a shout out.
Shout out to them.
To them.
Oh, there they are. That's so cute. Oh, it's cute. That's a great
All
picture.
those my guys, yeah. So all the teachers any teacher can make an individual teacher, or if you're married, to another teacher, you can deduct up to $250 for materials, books, things you have to buy for your classroom, which I know our Montessori school have to do that. And so if you're married to another teacher, you can deduct up to $500. Sticking with an educational subject or topic, students who owe student loans, which are very prevalent out there, obviously, as we all know, can deduct, subject to, again, some limitations, can deduct the interest on their student loans.
Okay.
And I work with some lawyers and doctors that owe hundreds and thousands of dollars of student loans, and so that can be an important deduction as well.
Absolutely.
And then finally, HSA or health savings account. Again, having kids, I know how important medical expenses are.
Yeah.
You can contribute to a health savings account and deduct, if you're an individual, up to I think it's $31,050 this year, or no, sorry, $3,050 this year, I think it is. And if you're married as a couple, $7,100 per year, you can deduct off your federal taxes as far as contributions to that health savings account.
It's wonderful. The one thing that I think is always so tough about it is that the tax laws are always changing. So it's hard for the average person to kind of stay on top of it and know what they should be taking advantage of.
Yeah, it's kind of like a moving target, right?
Yeah.
And to that point, right, in 2017, going into 2018, tax laws changed completely.
Right.
The Jobs Act tax cut law. So there's a few things that I wanted to mention with that tax law. One, that expires in 2025.
Which I didn't know. I
Yes.
saw that in your information, and I didn't realize that there was sort of a sunset to it.
There is. The corporate tax cut was permanent, but the individual income tax cut sunsets in 2025, pending any other legislation.
Okay.
So number one, and actually I wanted to add this specifically in this situation when people are kind of worrying and wondering about where income's coming from, if their job situation, the child tax credit was actually increased to $2,000 per child if you have a kid.
Yeah.
And it used to be subject to some income limitations.
Yeah.
And those have been raised, so most people can take advantage of that. So if you're in a situation where you're wondering where income's going to come from right now, and you can get your taxes filed and you have children, you can get up to $2,000 per child.
Wow. Yeah, and it depends on their age, I think, too. Because
Correct.
I have one who's
Yes.
too old for that $2,000. I think she's
Yes.
only worth $500 now because she's
Yep.
over 20.
Correct.
But,
Yes,
yeah.
they're subject to, again, limitations, and but like me, I have a 12, 9, and 6-year-old at home, so that's
they all
$2,000 per
qualify.
kid. Yeah.
Yeah, that's a lot. And important, you keep mentioning too the importance of seeking out a professional. And with those changes and knowing how things might work best for you, I think it's so important for people to know. So I wanted to share this information because you have some great events coming up. Northwestern Mutual, the Leader Group, your group in particular has the Milwaukee Shift. That's happening on May 14th at Milwaukee Brewing Company. And then you have a golf outing planned to support Women for MAC. That's happening June 15th at North Shore Country Club. And we talked about it during the commercial break, obviously subject to change with the way things are in the world today. But people can find out more information about meeting with a financial professional. A great time to do that with things ever in change mode, as well as your taxes. If you call 414-203-6015. It's easy for a lot of people to email right now, and you can do that confidentially to Jayla. It's jayla.sullivan@nm.com. You can also go to downtown-mke.nm.com to find out more, too, about the Leader Group there. Wonderful to talk to you. Important information. Appreciate it.
No, thank you. Good to
Thank
be
you
with
so
you.
much.